Well, I know you've grown accustomed to me coming up most of the time whenever such movements happen and saying, don't worry about it, we're going to correct on this literally in no time, and kind of bringing everyone's emotions down, and, bringing everybody to sanity, right? So, unfortunately, for those who keep anticipating this thing to reoccur and ignore my warnings about that eventually it will stop, and in fact it's getting closer to the point where it will stop doing that, and getting most of the public, if you will, conditioned into this. And so the unfortunate reality of the thing is that it is already showing significant signs of cracking and pretty much coming to a halt. What do I mean? Let's go over the price action of today. In fact, those of you who are in the community, of course, have not been caught off guard. We have been anticipating this. This is literally the markings you can see on the chart right now. Those are markings from yesterday's meeting. So what is this little emoji thing is looking at, and why is he is so unpleased? This emoji is basically pointed to look at this one thing right there. So if you pay attention to what we had throughout the session today, which is, it's not completely abnormal, it's not regular definitely for us to generate a gap throughout the session. Unsurprisingly so, it happened at 6904.8, where we have a form of a resistance that played out, of course, many times. We've mentioned this, many times before, right? This very level is very well known. Which also justifies the retracement that potentially may occur to this level. And normally you would expect me to say, oh guys, don't worry about it, we're gonna come back to these higher highs within no time and things are gonna be fine and this and that. Well, in reality, although we had that choppiness throughout the session, and then that generated subsequently, well, a couple of gaps, although the first couple were closed really rapidly, and then we have this one left over on the top, roughly between 6,904 to 6,900. Wait, sorry, that's the lower band. Okay, I was looking in the wrong place. 6,895.4, and that, but basically that number, that 6,904.8, roughly, give or take, with maybe a cent of a difference. So we still have that leftover gap. The price action, of course, went mostly sideways throughout the session. You can see even the channel is now positioned sideways, although we have been moving sideways. And this is kind of part of the thing that warrants why this. First of all, this is on the continuous contract, which is very irregular, and the continuous contract does not like gaps being left, not filled in and opened, if you will. And so, and another thing, of course, we can identify quite easily, we are having this potential head and shoulders formation of sorts, which may lead up to this corrective movement to close this gap easily right here towards that 6,904. And then, of course, a corrective movement back into the channel, continuing the overall trend that, as you can see, appears to be going, of course, downwards right now. But you're going to say, well, Greg, not a big deal. Usually what will happen in a couple of minutes, you're going to go to the larger time frame and tell us how you identify this correction that's going to take place probably potentially next week, or us moving into the weekend. Well, actually, no. And I've warned about this. There's a lot of people are about to pay a very expensive price. Now, those who don't plan and are completely fine with, surviving these events, no, absolutely, that's like one part of, one type of people, and that has nothing to do with them. But those who will be affected by it, which are actually the most. And if we look at this objectively, now we're gonna find something very interesting. The market still has, as you can see, well, bearish, right? Objectively bearish on bearish, and moving downwards. In fact, I think, maybe we should jump over, for example, for the time being, to the regular contract, by the way, which is very irregular. This is why most people are going to be very confused, especially those who expect the market to continue downwards and then it will correct slightly up before it continues more downwards, is because of those gaps, because they are invisible on the regular contract, but they are definitely there. on the continuous contract, as we just saw in the futures. And so subsequently, because these will be led, another thing can happen. Of course, these can be closed overnight and then ignored tomorrow, given that we already have this area filled in and no actual active gaps on the regular contract. So as long as that will get filled, if that will get filled throughout the night, basically, and pre-market tomorrow, anywhere between there and there, then the market will actually ignore this gap altogether and may proceed downwards tomorrow with no corrective movements to the upside. Now, the reason we are suspecting some corrective movements to the upside, which now are actually curving inwards. For example, my suspicion was towards that 30 minutes that can lead to a finalizing corrective movement and closure filling of these the gaps. But if we objectively look at this, it is already curving inwards and potentially going to lead back into the bearish territory. Of course, the 45 minutes kind of shows very similar something, so this may be indicative of tomorrow's closure, but given how close we are, we're basically half an hour away from the end of today's session. So that means tomorrow, or rather throughout the night, what we can see that this momentum is being positioned towards right now throughout the night and pre-market tomorrow. The market may fill in that gap, and as I said, and for us not to be needing to stop for it, and then the market will continue downwards in tomorrow's session, in the actual session. We are seeing some confluence of the forces here on our stochastic RSI in oversold territory. We are seeing that we are currently becoming bullish given that confluence. But how severe is that? Of course, if we're looking at the 1 hourly, that could be very much indicative of what we're expecting, that filling of that gap until tomorrow. And given that we're still in bear territory, and the fact of the matter that our 4 hours, which is the larger time frame, meaning what we're having on the hourly is just internal to this area, but on the grand scheme of things, we are still actually moving downwards towards that 50 area, which will then lead us into bearish territory with very defined and clear divergence between the forces. And since we're not having any potential confluence anytime soon, that will potentially stay bearish as it currently active is, and in fact get amplified once moving into bearish territory further below that 50. Now, since we're on the daily, we are objectively bearish, and potentially the more bearish we're going to get, the more drag we're going to have towards the downside, right, over the longer period. So in fact, looking at the daily, we are not just looking into tomorrow's session, we are actually looking into next week easily. That means next week, on the grand scheme of things, appears to be now already to be very bearish. So later when people will say, oh, I was not prepared, the market didn't give me a personal announcement or a message, or are you fucking kidding me? I mean, first of all, it has tried to tell you as much as it could, but yeah, you were not paying attention. Why? How can you pay attention to something you don't know? Exactly what I was warning and saying, how that weekly will converge, and although it looked like it was about to unravel, open up and go upwards, given where we are in the cycle and the familiarity and understanding where we are in the cycle, it was completely clear, given the adjacent time frames, that we're actually going to become bearish and not remain bullish for long. Just that basically was just that all entire impulses, and as you can see, we're now dipping below, in fact, with both forces, bearish dominant, right, D-dominant, if you will, and we are now below that 50 mark. Clear divergence between the forces, and so we're going to be seeing throughout the following weeks what appears to be a lot more of a bearish sentiment and a movement downwards that, as I've been warning all along, will start leading us towards that 6,666 that we know to be a very symbolic, strong level that had played its role multiple times. Of course, it's not just straightforward. We will stop at some of these levels. We have 6,791, arguably in some surrounding lighter support and resistance levels, but generally these are the major ones. 6,764.58, that's another level that we will have and stumble upon and stop at. Then you have 6,737.48, that's another level we will stop at. And then of course you have 6,666, if you will, 0.66 or 00, doesn't matter, both of them will play a role once we get within the vicinity. And subsequently, of course, if you really want to know what will be the following upcoming level after that, of course, that's 6,600, the round number that is also quite a strong psychological level that will play its role once we get in its vicinity. Why are we suspecting that? Just as we said, we are seeing on all fronts, on all the larger medium fronts, how the price action is becoming more and more bearish. And of course that is affecting what we are seeing on the monthly. Our monthly is now becoming a lot more aggressively bearish, indicating more of an aggressive bearish downwards movement, which, as I said, will lead us even lower than that 6,666. It's just that right now, given these medium temporary sort of well, temporary because we're looking in the shorter run movements to the downside, will be leading towards that 6,666, and then onwards to the following levels. As you can see, there are many on the way down. Our general target post 666, which of course not just going to happen that we're going to test that level for a couple of days, and that's well, that level, that's 6,666 for a second. We're not going to be testing it for a second. We will be testing it for quite a while, maybe even several weeks, maybe even a couple of months, potentially. At least at the time being, that is the assessment. Maybe the closer we're going to get, we're going to identify the momentum is very strong and leading to the movement, to a rapid movement even further lower. But of course, at the time being, those are our major support and resistance levels and how our momentum looks like. So I've warned all of you people quite many times. Of course, I'm not referring to my members. My members are quite well aware, very up to speed. I recommend all of you boys and girls who found themselves on this channel coincidentally, definitely subscribe, like, join the community, join the Discord, join through the Patreon, which is now currently discounted. In fact, let me see. No, well, shit, I don't have it all on prepared. Pardon me, but you do definitely have the address right here below me, right there. You can see that is that beautiful thing, right? Patreon.com/Greg_Ori_H. There is a discounted tier right now that is only $50. That tier will become $70 at the end of this month and will be then hiked next month to $99. It's currently now 50% discounted, so definitely join in so you can be one of those people who are in the know. And now that the market is about to break, just as I warned in my recent videos multiple times, whether it's talking about Palantir, whether it's talking about the vastness of the market, whether it's talking about other individual assets, generally speaking, all the signs were there and showing quite a while, and I've been warning and showing these things on my channel, so I highly recommend you subscribe. Course, I'll be highly appreciative if you would like the video as well. And that's it. I'll see you on the next one, boys and girls. Don't say I did not warn you. And if you didn't know, well, it's because you didn't listen.